When I opened my investment round, I ran into an unexpected problem. There's plenty of information on how investors evaluate startups, but almost nobody talks about how a startup should evaluate investors and the tools used to raise capital, which is strange, because there's no shortage of stories about what happens when you choose the wrong partner. So I decided to approach this systematically, work through each investor segment deliberately, draw my own conclusions, and share what I find. Here's the landscape: angel investors, friends and partners, clients, funds, family offices, accelerators, public investment platforms, and more. Each segment has its own rules, its own logic. Here's where I started. I broke the process into several parts. Make the project investment ready. Technology, legal, management, financials, full transparency across the board. Do the inner work. Step outside the product building process and look at what we've actually built. Start respecting yourself and the team for what you've achieved. This part matters more than it sounds, because until you do it, you'll walk into every investor conversation asking for money. After you do it, you'll walk in offering an opportunity to multiply theirs. Learn to respect investors' time. That means preparing all materials clearly, in the formats and metrics they actually use. Be understood in the first 5 minutes, not the 5th meeting. Segment the investor market. Understand who we're interesting to and who is actually interesting to us, in terms of what they bring beyond capital. Define my own criteria for a good partnership. I'm not here to change how the investment market works. I need to understand its rules and operate within them. But as CEO, I get to choose who I work with. The goal is mutual benefit in the shortest time possible. 3 things turned out to matter most at this stage. Transparency. There's no shortage of investment companies with publicly stated interests, but most of it is just a landing page, polished photos and impressive numbers from past deals. I want to know exactly who I'm actually talking to. Professionalism. I need to know the person across the table has the skills to understand what I'm offering, not just the title. Feedback. It's completely fine if a partner needs time to review the project. Decisions take time, but some kind of response in any case matters. With that fairly basic framework in hand, I went to meet the market. Last week, I spent time with representatives from one of the most recognized formats in the investment world, Accelerators. We arranged meetings with several representatives from well-known international accelerators, and I'm genuinely grateful for those conversations. Thank you. I mean it. I came prepared. Metrics, unit economics, results, materials, all ready. 30-minute Zoom calls. Honestly, I walked away wishing I'd done this 20 years ago. For 20 years, I learned by making my own mistakes, exactly what these programs exist to help you avoid. If you're early stage, have time to experiment, and aren't sure of your footing, I'd genuinely recommend exploring this path. What worked? Every representative was sharp, professional, and clearly identified with the organization they represented. The programs have well-built operational models and clear answers to process questions. The portfolio names are impressive. Serious companies, serious track records. If you get selected, you're not an idiot. Your product makes sense, and you can execute. 6 months in, you'll be a different founder. What didn't? The people I met were screeners, not selectors. Their job, as far as I could tell, was to validate the person, not evaluate the business. They explained the accelerator well, but couldn't go deep on the actual product. Most specific questions ended the same way: fill out the registration form, submit materials, and the team will review. Which team? We'll see. That's where the core mismatch begins for me. The most valuable assets a young project has, and I as a CEO have, are these. Faith, the ability to accept an idea that doesn't exist yet, to plant it, and to treat the first tiny signs of life as proof that it's real. Focus, the energy of attention and time, directed at growing that first result into something larger. Resources, what you extract from early results and reinvest into the next step. Awareness, the ability to step outside the process and honestly assess what's working and what isn't. Decisiveness, the ability to adjust, correct, strengthen, and keep moving. That's how you build a company, one brick at a time. Which is exactly why every step and every choice matters. So here's what the accelerator model asks you to do with those assets. Spend your time on the belief that someone unknown will like your product. Spend your faith trusting that someone else will connect you to the right people. Spend your resources running a parallel process with no guaranteed outcome. Operate without awareness of what's actually happening. Feed your data into a black box. Wait. Who's in there? Are they looking? What are they looking for? Will there be any feedback at all? Who's in there? Are they even looking? What are they looking for? What are their priorities right now? Will there be any response at all? Timeline. Here's how it actually works. Submit your materials. Wait 1 to 2 months for a response, if one comes. Then a few meetings, again with who exactly is unclear. If the project clicks and the team clicks, we move into 10 to 20 weeks with mentors. Then maybe we get in front of investors. Then maybe we get funded. What I see running in the background through all of this is a process I'd call waiting for the unknown. It quietly drains attention, focus, and energy. And what it's really asking is to trade my core assets for a probable outcome at an undefined point in the future, with the result depending not on me and my team, but on people I don't know. So I weighed the pros and cons, acknowledged I might be wrong, and decided this particular tool isn't where my attention goes right now. I shared above who I think this works for and when. I hope these observations are useful to someone building their own path. I'm moving forward and continuing to explore opportunities across different segments of the investment market. Thank you for your attention. Vlad Winner, CEO, Binom AI, Inc.